Okay, good evening, everybody. Good evening, everyone. I hope I am audible. Kindly give me an emoji if you can hear me. Give me an emoji. Let me be sure you can hear me loud and clear. Am I audible at your end? All right, thank you. Thank you. Okay. So, how was your Sunday? Hope you went to church. And yesterday we took our time to discuss decentralized finance. And we dissected that area. I hope you took out some time to do a little research. That is what I expect. If you did and you have a question, you can drop it at the comment section. And if you have a question whatsoever, whatever you need clarification on, drop it at the comment section. I will attend to it as we go on in this class today. Today, of course, we are. Kindly mute your mic. Mute your mic.
No, but next time they see a bond, they can remember.
Please mute your mic. Who is that? Thank you. Okay. Today, of course, I told you we are going to delve into trading. Introduction to the trading aspect. I'm going to guide you on what trading really is. We'll discuss that. How to trade. I'm going to show you how. When to trade. And I am going to delve further into what we call the psychology of trading. And after that, I'm going to give you a neat bit into risk management. I'm not supposed to do that in this class, but I will. I would guide you into that, and you will now know what to do with the information. My job is to inform you. Your job is to make proper decision with the information you get. So we'll just go into it right away. We've already spent about 9 minutes. So let's get to it. Any question you have, ensure to drop it at the comment section. By the time I'm done, I would attend to the questions, all right? Okay. So let's go. Let me share my screen so that you can see my screen. Yeah. Oh, the recorded class was not sent yesterday. Oh, I'm going to drop the link to the recorded class, all of them. They're available on our YouTube channel. So I'm going to drop the link to the recorded class today. I'm so sorry I didn't follow up to see that it was sent yesterday. I'm so sorry about that. Okay, I'm going to drop it today. So immediately after this class, I will drop the recorded class, all right? Yeah. I hope you can see my screen. If you can see my screen, indicate, give me an emoji that you can see my screen. Can you see my screen? Can you see my screen, please? Okay. Everyone can see my screen. All right, let's go. We're good. Let's go. So what is trading? What do you understand trading to be? What is trading? So today we are handling trading, and this is the agenda. Like I said, I'm going to introduce you to trading, types of trading, how to buy, how to sell, the psychology of trading, and risk management. So follow me. And any question you have, drop it at the comment section. I'll attend to it. Now, what is cryptocurrency trading? It's just the buying and selling of digital assets. The buying and selling of crypto assets. Now, trading in general is the buying and selling of digital assets, but cryptocurrency trading is the buying and selling of cryptocurrencies. So I want to give you something. If you catch this, you will do very well. The same pattern of buying and selling of digital assets, buying and selling of digital assets is the same way you trade cryptocurrency. So if you learn the technicalities of cryptocurrency trading, you would also apply that in Forex trading. You apply it in metal trading, in all asset trading, as long as it's the financial market. So if you want to trade stocks of companies, this is also how you trade them. So that's just what crypto trading is. It's the same system, but now inside that system there are different strategies. So you need to understand the system and then find your own edge in the system to beat the market. Now, what are the types of trading? We have the day trading. These are called day traders. These are people who trade on a daily basis. They take short-term entry, buying, and short-term selling. Maybe they can be within 5 minutes, they will trade. In the next 5 minutes, they will trade and come out. Next 5 minutes, they trading. In the next 15 minutes, they trade and come out. Their trade does not go beyond 1 day. That they enter and exit trade within 1 day. And then we have the swing traders. Swing traders are people who trade between 1 day to 1 week. People who take from hours, maybe 4 hours to 1 week, to 1 day, to 1 day, then to 1 week. Their trade lasts from hours to weeks. These are swing traders. Then we have people we call scalpers. Scalpers are people that pick trades at seconds, minutes. Their trade does not get up to, it doesn't get up to 10 minutes. Between 3 minutes and 1 minute, they scalp, they leave. 3 minutes, 1 minute, scalp, they leave. So those are scalpers. Now, what is the essence of you finding out the kind of trader you are? You need to discover the kind of trader you are. Yes, some people might just come into crypto trading or into trading and they said, I'm a day trader, I'm a swing trader, I'm a this one. No. It is your attitude, your habits that would establish the kind of trader you are. There are people who don't know how to hold trade for long. It gives them high blood pressure, especially when they are seeing profits. They don't know how to hold it and see that trade go back to entry and come up again and go back to entry, even go below entry, come up again. They don't know how to do that. So those kind of people, the moment they see small profits, they take it and leave and enter again, take it and leave. It is your habits that will reveal the kind of trader that you are. So you can be a day trader, you can be a swinger, you can be a scalper. All right. So those are the types of trading that we have. We also have what we call position trading. These are people who hold trade for a very long time. This set of people hold trade because it's not just because of the technical aspect of
Talking about
who is speaking. If you're interfering with my class, mute your mic or I remove you. Whoever it is, you're interfering with my class. Okay, so position traders are traders that hold trade for months, even years. There are people who enter trade as at the bear market of 2022. Position traders who enter trade when Bitcoin hit $15,000. And they held it till 2025. These are position traders. Now, they hold this based on fundamental knowledge. Position traders emphasize understanding the underlying fundamental of assets, allowing traders to make informed and strategic decisions over extended periods. They have strategy focus, you know, and that kind of holders are not holders that go in trading with $10, $20, $100, not even $1,000. These are institutional trading. They also analyze market trend and know when to enter and when to leave. Now, although position trading typically requires patience, it can yield substantial reward by capturing significant price swing and minimizing the impact of daily market volatility. Now, this set of people, this kind of traders, they have they have a bank of patience. It's not a bag. This one is a bank. There are people that are patient. Imagine being a position trader and your target is 5 years or 3 years, and you hold a trade from 2022 to 2025, and now take profit at entering Bitcoin when it is $15,000 and taking profit at $125,000. Do you know what that is? Do you know the kind of patience that is? So that is position trading. It's not for the weak minds. So now you compare this kind of trades. Understanding the difference in this kind of trades will, someone's mic is still on. Please mute your mic, everybody. Understanding this kind of trade will save you time. The kind of trader you want to be will save you time and effort and save you money as well. So you need to know the kind of trader you want to be if you want to go into trading. As a day trader, it involves making multiple trades within a single day, capitalizing on small market movements. And then position trading is a long-term strategy. So you can decide to be a day trader, a swing trader, a scalper, or a position trader if you have the kind of capital to hold that position. So a position trader does not look at what is happening in 1 minute, 2 minutes, 5 minutes, 10 minutes, 1 day. He looks at what is happening from weeks to months to years. That is how he makes his decision. As a position trader, the market is less volatile. So he makes a more sound decision based on the market trend. Because as the market, the time frame you choose, you make your decision is increasing, the market is less volatile or less noisy, right? Then as a swinger, the market is also less noisy. Where people have issues is in scalping. If you're not very good with scalping, don't scalp. 1 minute, 5 minutes, you just lose your money. You make $1. In the next minute, you lose $3. In the next minute, you make $10. In the next minute, you lose $15. That's scalping. So comparing these types of trades, You also look at the risk involved. Different trading styles carry varying risk profiles, from high volatility in day trading to more stability with position trading, influencing decisions based on individual risk tolerance. So you have to know the kind of trader you are so that you know the kind of risk you're going to take. Also, you know the kind of time, the amount of time you're going to commit to that trading. These are very fundamental, important things you need to know as a trader. I hope you're grabbing what I'm saying. So how do you buy a crypto coin? It's as simple as getting into an exchange. There are different kinds of exchanges. We have Binance, we have Bybit, we have that centralized exchanges. We have Bitgate, we have Wix, we have a lot of them out there. Now, when we go into the class properly, we would open these exchanges and understand them better. These are centralized exchanges. We also have decentralized exchanges. So choose the exchange you want to trade in, and then set up your account, open your account, do your verification if you're using a centralized exchange. If you're using a decentralized exchange, connect your wallet and then put your money in there. When you put your money, you take your trade. I hope you're following. Put your money in. So it's as simple as that. Then how you place buy orders. This is more practical. It is a more practical aspect. I will still show you when we go into the class properly. There's what we call market orders, limit orders, and order type. Now, market orders is an order where I'll tell you to enter a trade immediately at the market rate right now. You enter, that is market order. Limit order is when you want to enter, maybe Bitcoin is at 500 and you want to enter Bitcoin when it is at 459. So you've done your analysis, you know that very soon Bitcoin will hit 459. And if it hits 459, it's likely to come up, hit 459 and then go up to 600. So you go and wait for it at 459. So that is a limit order. You place your limit order and then wait. Now, guys, you need to understand something. Trading is a game of patience. I repeat again, trading is a game of patience. Trading is a game of discipline. If you're a trader, there are lifestyles you cannot believe. You will not be living anyhow, because trading will teach you discipline, to teach you patience. It will teach you things that you ordinarily will not learn in school. You will learn it if you want to be successful in trading. So when you understand this type of orders, you now place your trade and wait. As simple as that. The moment it gets to your point of profit, it automatically gives you your profit. Now, selling is the same way. You choose your wallet, you choose the cryptocurrency you want to sell. Maybe you have Solana, you have Bitcoin, you have Ethereum, choose the one you want to sell. Place your order, decide whether you want to sell immediately or you want to sell it when it is, maybe if it is Solana is $80 today, you want to sell it when it is at $95. So you place an order at $95, Solana should sell this quantity. Whether you're there or not, it will automatically sell. Remember that you're dealing with smart contracts as well. I hope you got that. So now in selling crypto, you confirm, after you place your order, you confirm, you can also make your withdrawal and monitor your account and all that. It's something simple. It's just for you to place your order. When it sells, if you want to withdraw, of course, you see where to withdraw and you put the wallet address where you want to withdraw it to, and it is sent. Now, when you want to buy crypto, what are the things you look out for? There are 3 things I'm going to I'm going to release to you tonight. There are more, but these are 3 major things. In the class, I'll break it down to where you will find them. I'll open the chart and show you how to identify them. There are technical indicators. There are market sentiment and volume spikes. Technical indicators is technical analysis. Technical indicators is called technical analysis, where you use the charts, the tools on the chart to make decisions based on the behavior of these tools. You now make your decision whether to sell or to buy or to wait. So this is technical indicators. We are going to do that. We're going to enter into technical analysis in the class properly for this number of weeks that you're going to be with us in the academy. We'll go into technical analysis properly. By the time you're done with that course, you'll be able to make decisions to know, when you look at the chart, you'll know if this market, you should buy it, you should sell it, or you should wait, using the technical tools that are at your disposal. The market sentiment is when you are monitoring the market based on news, based on what is happening around the world, based on decisions, political decisions, and economical decisions that are being made. These are market sentiments. So you need to also monitor the market sentiment to know how it affects the trend in the trend of the market. So if the market sentiment is poor, market will fall. If the market sentiment is very positive, market will rise. That is why Bitcoin falls and rise. When if Trump comes and says something, and when exchange rates are cut, market rise responds to it. When exchange rates are increased, market responds to it. You need to monitor to know how does market respond to this negative and positive news. That is market sentiment. Then volume spikes. When market sentiment when you understand market sentiment, you also see that the market sentiment is directly influencing the volume spike of the coin or the token or the asset that you're buying or selling. When the market sentiment is poor, the volume of the asset reduces because people begin to dump that asset. You see that the volume will spike towards reduction towards the red aspect, the sell, or reduces. And then if the market sentiment is bullish, it's positive, the volume will also increase. More people will be interested. People will pump money into that asset. And this movement is what you, a trader, you are looking for, so that because it is in this movement that you make your money. When it moves up or moves down, that is how you make your money. So cryptocurrency is not expected to be stable. It is not meant to be stable. It is meant to be volatile. It is in the volatility of the currency that you make your money as a trader. If there is no volatility, you will not make money. I hope you're following. I hope I'm not too fast, guys. Please, if I'm too fast, drop it on the comment section. I'm too fast. And endeavor to drop your questions so that you will not forget it. Hope I'm not too fast. Am I too fast? The 30 minutes gone. So now the buy indicators. Now, one of the things you use to buy a coin, whether you want to buy a coin for keep or for sell. Okay. Okay, no, you are not too fast, okay? Thank you. Whether if you want to buy a coin, whether you are buying for long or you're buying for short, one of the things you check out is what we call breakout patterns. I'll go into that in detail during the class. Breakout patterns occur when price move above resistance levels, indicating strong buying momentum, which can signal an opportunity for traders to enter positions. So if there's been a time where that coin has been at a particular point for a very long time, maybe it's been between 20 to 22, and it's been there for like 2 weeks, for like 1 week, and it formed what we call a range. It forms a resistance there. You watch when that resistance breaks out to the upside. When there is a breakout to the upside, that is a good example, a good opportunity for you to enter the market and buy. But we will break it down to where in that breakout should you buy. That is what we would explain in class in detail. Another pattern is the flag pattern. The flag pattern indicates a brief consolidation before a continuation in the prevailing trend, helping traders to identify potential entry point after a breakout. Now, the flag pattern, you know how a flag is. You know how a flag is. A flag is, I would draw it when we get to class. The way that flag is, if you watch these flags, when there is it's like a consolidation. So you draw your line to point at the pointed side of the flag, connect it to the candles. When you watch it and there is a breakout from it, either to the downside or the upside, is a continuation. When it breaks to the upside, it tells you to buy. I'm showing you buy indicators. There's another one called the cup and handle. Now, these are the very major ones. There are a lot of them, a lot of patterns out there that we are going to discuss in the class fully. This pattern signals bullish sentiment as the price forms a U shape followed by a slight pullback, suggesting a potential upward break. It's like a cup and handle. So you see a U shape, and then the side of it now have a form of connecting hand to that U shape, which is kind of like a C something. That's a cup and handle pattern. So when you see that pattern, you know that it is a bullish pattern. So from there, you make your buy decisions. So what are the things you see when you're selling? Key indicators for selling decisions: resistance level. When an asset is hitting resistance and it has resistance over time and it could not break down, it starts coming down, it's an indication for you to buy. Resistance level indicates price points where selling pressure may increase, making them crucial for identifying optimal sell opportunities to maximize profits and limit loss. Another thing is negative market news. I spoke with you about market sentiment, right? So when the market sentiment is negative, it's an opportunity for you to buy. So with that negative news, you now use your technicals, add that negative news to the knowledge of technicals and place your trade. The moment you do that, like I placed a trade at when Solana was at 145. That was some time ago. I placed a trade at 145, and that trade took me from 145. Solana was just bouncing and bouncing and bouncing until it broke out to 120, bouncing and bouncing and bouncing. As we speak now, Solana is at 85 after the last time I checked, from 145. Can you imagine? Now, that is what we call swing trade. Now, it was not a day trade. It didn't take 1 day for you to do that. It has gotten about 2 weeks now. From there now, it has entered a position trading. It has gone down, it kept going down. Now, the reason why it is like that is because the market sentiment already is negative. We already have a negative market sentiment. And then I looked at the resistance level. I used my technical skills and I placed that trade and left it. It's still coming down. And I use a very small lot size. It's still coming down. I'm expecting to take my profit around 40 something when Solana will hit 40 something from 145. So you can imagine what that will give you. Another key indicator for sell is overbought signals. Now, overbought signals is usually identified when you use what we call relative strength index indicators. You use that to indicate when a market is overbought, an asset is overbought. and you enter a cell and take your money. I hope you're following. So when you, now I'm showing you the indicators, right? These are the key indicators. Now, how do you now sell? When to sell is when is setting profit targets will help you know when to leave the market. Don't be too greedy. Market trend, when you look at the market and you know that this market is falling, that is a good time to sell. Then emotional control. One of the major thing that actually takes a lot of traders money is not that the market is not good or their strategy is bad. The major thing that destroys a lot of traders is fear and greed, emotional control. So you need to learn that. That is what we handle under trading psychology. So understanding emotions in crypto trading. Managing emotions is crucial in trading because fear and greed can lead to poor decisions. Discipline and patience are essential for a successful trading strategy. Now, if you want to go into trading, you need to have discipline, you have to have patience, you need to develop a strategy, you need to follow plans. As we go on, I will be showing you more of the things you need to develop. You need to stop impulsive decision making. You don't just open the chart and then see the chart and then jump inside. Everything is going down, you jump inside. You will lose your money. Oh, that little $10 you have, you will lose it. And that is what the market wants to collect. No matter how small your money is, the market is interested in it. Your own is to know how to get the money, the one that the market has. So strategies to maintain trading discipline. Avoiding impulsive decision is crucial. Staying disciplined helps individual traders. And what are these strategies to maintain discipline? Stop over trading and stop revenge trading and stop holding losses. Don't overtrade. You need to have the number of trades you want to take in a day or in a week or in a month. And then when you lose a trade, don't go and say, I must get this money back. The moment you hit the number of trades you want to do in a day, in a week, or in a month, don't trade. Whether you are in a loss or in a gain, hold. Don't trade again. Then when you are on a losing streak, then let it go. There's what we call losing streak. When somebody has started trading, first trade is a loss, second trade a loss, third trade is for a whole week you're losing trade. Rest in Jesus' name. Just take time off. Take time off, rest your head, then and then come back. That happened to me a few days ago. I for 2 consecutive days I entered trades and I lost all of them. All the trades I enter, I lost. I enter again, I lost. I enter again, I lost. I just rested. I just left the trade. I just left the market entirely. Took myself, got myself involved in something else. I started reading, watching movie, eating food. I started cooking, eating food. Go to YouTube, I'm watching how they make different kinds of food that I may not make in my life. Just distract myself. After some days, I came back to the charts again, right? And I regained those losses back. I regained them back. So that's one of the psychology of trading. If you don't take that time off, you will lose more money because you begin to make impulsive decisions and you've overtrade, you'll be taking stupid risk. And the consequence of that thing you're doing is that at the long run, you will blow your account. Don't FOMO into any trade. FOMO is fear of missing out. The market is always there. Opportunities are repeated. Yes, easy, yes, but the strategy is not the problem. The major problem is the psychology. strategy is not always the problem. The major problem is always the psychology. So you need to work on it. Fear of missing out, that is FOMO. Don't think that opportunity will not come again. If you miss this opportunity, another one will come. The fear of missing out makes people do a lot of crazy things in the trading listing. We're already 40 minutes gone. Risk management. Risk management. Now, if you notice, these are peripherals that I'm showing you. So in the class, when you do your registration, I hope you have registered for the class. Remember that the discount is ending today by 12 a.m. The discount is off. So if you haven't registered, it's for your own good. And I'll not shout about it again, because whatever is being given to you is being given at a platter of gold. All right, risk management. Implementing stop loss order. There are some of traders that they don't put stop loss, they just let it run because now your papa get market, abi, no go put stop loss. Now your papa get market. Implementing stop loss order. Stop loss is an order you put to manage your risk, so that if the market goes against your strategy or your prediction, it will take you out, and maybe you lose maybe 5%, 2%, 1% of your account, but you will still have capital. Listen, the secret of trading is being in the market long enough to make profits. It is not making profit in one trade. It is being in the market long enough to make profit. Because if you want to make profit in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, and you lose your account, by the time you will see the trade that will give you real money, you no longer have money to do that trade. And in most people, it is when they've lost their account, that is when they begin to see real entry, the one that gives them real money. But by then, they no longer have the money. So you need to learn to use a stop loss. While your position size also matters. So we will do the calculation of the proper stop loss to use, the proper position size, the risk to use in every trade based on your account size, and your stop loss, your TP, because your stop loss should also determine your TP. Your lot size, your stop loss will determine your TP. So these are the things we are going to go into details. To mitigate risk, diversify your portfolio. Now, you diversify your portfolio when you have a good portfolio. When you have $100 portfolio, what are you diversifying? Want to be going $10? No. When you have a good portfolio, let's say you have a $5,000 portfolio, $2,000 portfolio, you can diversify to 2 places or 3. So you need to learn when to diversify and when not to diversify. Diversifying actually is a part of risk management. So essential strategies for trading, successful trading, you must learn how to trade, keep journaling, keep trading journal. I will also guide you on how to create trading journals and what it is to keep a trading journal. Also reviewing your trade, which is what we call back testing. We will also do that. And also learn how to create a plan, a trading plan, and stick to it. That will help you in your discipline life. That will help you discipline your trading life. All right? Am I too fast? So sticking to your trading plan is crucial. It helps maintain discipline, reduce emotional trading, and ensure that decisions align with your long-term goals and risk tolerance. So as a trader, you must have a goal. You must have a target, a long-term goal and target, and then have a plan and then stick to the plan. So as a trader, you see how trading will even change the path. I'm coming. What is diversification? I will explain. You see how trading will even teach you how to handle your life well. Trading will teach you planning. Trading will teach you discipline. Trading will teach you how to control your emotion. It's not every food you see you eat. It's not every woman you see you pursue. not every man that gives you a gift you accept. Trading will teach you these things. That thing you don't want to learn from school, you don't want to learn from church, you will learn it in trading. In Jesus' name, amen. Now, somebody asked, what is diversification? Diversification is simply putting your capital in different digital assets, not only in one asset. Say you have a $5,000. You use $2,000 to buy Bitcoin. You use $1,000 to buy Solana. You use $1,000 to buy Ethereum. You use another $1,000 to buy BNB. You are putting it in different assets, right? That helps you diversify. That is what diversification simply means. But diversification is good when you have a good portfolio, when you've grown your portfolio, right? It is not when you have it, it's not $100. All right. So let's go on. Which one was I talking about? Good. So trading will teach you how to be very, very disciplined. So trading tips. As a trader, you must learn to follow news. The news is not the news of Nnamdi Kanu said, or the news of Tinubu said. These are not world leaders. They are not making any influence in the financial market. Even though, yes, Tinubu's news can also make influence in the Nigerian stock market. But when we are talking about cryptocurrency, we are talking about news from world leaders. Trump, the president of First Nations, whatever. Trump mentioned them, those rates, exchange rates, those kind of news. Those are the news you follow, and so that you will be ahead of time. Join community. Of course, we have BJAS community, trading community, so that is where you will get help, you'll get guidance, and also you meet other traders like you. And also opportunities come up because exchanges will reach out to us and they will want to partner with us and give you some sweet packages that go with it. Then use alerts. We will show you how to set alerts, price alerts on your trading, both your trading tools, your trading platforms and your trading tools, the analysis and analytic tools, so that when you can be abreast of what the market is doing. All right. Now, before learning, you were emotionally damaged. Before learning, you were an emotional trader. Some of you here, you might have those of you that already are trading anyhow you like. But after you are done learning, you will become disciplined because you would have had a disciplined strategy, a structured approach that focuses on trading plan and risk management so that you will last. Yes, you will last. And you will see the difference in your trading habits. So understanding the different types of trading, how to execute these transactions and the psychology is essential for success. And continuous learning and practice will enhance your trading proficiency. So these are the things we are going to be offering you in the academy. So embrace what we have to offer. The masterclass, which is a $299 class, is being given to you tonight. It's ending tonight. It's being given to you at just $10, which is just 15,000 naira. That is what you're getting. That is what you're getting, guys. So I do not know what you are waiting for. What is the reason why you haven't taken that opportunity yet? Why haven't you taken that opportunity yet? So if you have any question, I will need you to ask your question now so I will attend to you. And that is a wrap for our class tonight. I hope I've done justice to that topic. I've done justice to that topic, right? Do you have any question? I'm expecting you to ask questions. Won't just be rapping and rapping. Yes. Yes, what is your question? Drop your question. Is it that I have done justice to the topic, or you have a question? Which one of them? Okay, so this is a wrap for us tonight as we come to the end of these 3 days free training that we just had with BJazz Academy. Yes, there is a way you can go back to the class. I will post it. I will post the link to the class in the group, and you can go back to our YouTube channel and watch it. So for those who have registered, we'll see in class tomorrow by 8 p.m. on the dot. For those of you who are registered, get ready, get ready, get ready, guys. See you in class tomorrow. And if you want to register, reach out to us in the group and do your registration. Do have a beautiful night rest and God bless you. Thank you very much and good night.